Hello everyone, I am Trupti Pandya and today I will be teaching you Element of Account Standard 11 Part 2 Chapter 4 Bills of Exchange. In previous lecture we already completed up to question number 4. Today let us start question number 5. Dasrath Bhai sold goods of rupees 1 lakh to Akash on credit, for which Dasrath Bhai drew a 3 months bill of rupees 1 lakh on Akash, which Akash accepted and returned. Akash could not pay the money on the maturity date, and noting charges amounted to rupees 910, which Dasrath Bhai paid in cash. Pass necessary journal entries in the book of both the parties. Answer part. First of all, we write the journal of Dasrath Bhai. First entry, Akash account debit 1 lakh to sales account 1 lakh. Being goods sold on credit. Dasrath Bhai sold the goods to Akash. So Akash is the receiver and so Akash account debit. And Dasrath Bhai sold the goods. So goods goes from business unit. So it is credit. Real account goes then credit. Being goods sold on credit. Second entry, bills receivable account debit 1 lakh to Akash account 1 lakh. Here Akash accepted the bills receivable. So bills receivable account debit to Akash account because Akash accepted this bill and bills receivable always debit and Akash is the receiver of this bill. So to Akash account. Now third entry, Akash account debit 1 lakh 910 rupees to cash account 910 to bills receivable account 1 lakh. Here bills receivable is debit in second entry, and when on maturity date bill dishonored by Akash and paid noting charges, at that time when dishonor of the bill is there, at that time reverse the entry, means Akash account debit and bills receivable account credit. And other there is a noting charge paid in cash. Cash is a current asset, so real account goes then credit. So 910 rupees paid and so Akash account debit to bills receivable, reverse this entry, and cash payment is there, so to cash account. So 1 lakh and 910 total amount debited to Akash account. Now in journal of Akash. First entry, here Akash purchased the goods from Dasrath Bhai. So purchase, then goods comes in the business unit. So when purchase comes, so it is debit. And here Dasrath Bhai is the giver. So Dasrath Bhai account credit. Personal rule, giver then credit. And purchase goods comes in a business unit. So purchase account debit 1 lakh to Dasrath Bhai account 1 lakh. Being goods purchased on credit. Now Dasrath Bhai drew the bill, and for the Dasrath Bhai it is a bills receivable, but for the Akash it is bills payable. So Dasrath Bhai account debit to bills payable, being bill accepted which drawn by Dasrath Bhai. Dasrath Bhai drew the bills. Dasrath Bhai is the drawer of the bill and always drawer is a creditor. So for Akash it is a bills payable, and bills payable is always credit. Bills receivable is always debit and bills payable is always credit because it is a liability and bills receivable is a asset. Now third entry, reverse this entry. Bills payable account debit 1 lakh, noting charge account debit 910 to Dasrath Bhai's account 1 lakh 910, being bill dishonored and recorded along with noting charges. Now question number 6. On 1/8/2016, Jayesh Bhai sold goods of rupees 60,000 to Dhawal on credit. Here Jayesh Bhai is the creditor and Dhawal is the debtor. Jayesh Bhai sold the goods of rupees 60,000 to Dhawal. Dhawal is the debtor and Jayesbhai is the creditor. Jayesbhai sold the goods and Dhawal purchased these goods. On 3/8/2016, Jayesbhai drew 2 months' bill on Dhawal, which Dhawal accepted and returned on 6/8/2016. Jayesbhai discounted this bill with the bank at 10% per annum. Dhawal could not pay the money on the maturity date. The bank debited an amount of rupees 60,500 to Jayesbhai's account along with noting charges. Past necessary journal entries in the books of Jayesbhai and Dhawal. Answer part. Journal of Jayesbhai. 1/8/2016. Dhawal's account debit 60,000 to sales account 60,000, being goods sold on credit. 3/8/2016. Bills receivable account debit 60,000 to Dhawal's account 60,000, being bill accepted by Dhawal. 6/8/2016. Bank account debit 59,000, discount account 1,000 to bills receivable account 60,000, being bill discounted at the rate of 10% with bank. 6/10/2016. Dhawal's account debit 60,500 to bank account 60,500. Being bill dishonored on the maturity date and noting charge rupees 500 paid by bank. So here bills receivable on bank account debit 59,000, discount account debit 1,000 because this discount is expense, and bank account debit 59,000 to bills receivable. When bill discounted at the rate of 10%, it means there is a 10% and 2 months are there, so 1,000 amount is there. Here it is calculation is given 60,000 into 10 upon 100 into 2 upon 12, means 500 rupees is the here Dhawal's account we have to write. Discount Dhawal's account debit 60,500 to bank account 60,500, being bill dishonored on the maturity date and noting charges rupees 500 paid by bank. Now journal of Dhawal. Purchase account debit 60,000 to Jayesbhai account 60,000. Here Dhawal purchased the goods from Jayesbhai. Jayesbhai is the giver and giver always credit as per the personal rule. Giver credit. Purchase account debit 60,000, being goods purchased on credit. 3/8/2016. Jayesbhai's account debit 60,000 to bills payable account 60,000. Here Jayesbhai is the drawer of the bill and for Dhawal it is a bills payable. Bills payable always a credit. And 6/8/2016, here Jayesbhai discounted the bill in the bank, but in Dhawal's account there is no entry because this transaction is between Jayesbhai and bank. So in journal of Dhawal there is a no entry. Now 6/10/2016. Bills payable account debit 60,000, noting charge account 500 to Jayesbhai's account 60,500, being bill dishonored and recorded along with noting charges. Now question number 7. On 2/9/2016, Rajan sold goods of rupees 89,000 to Namrata on credit. On 4/9/2016, Rajan drew a 3 months bill of rupees 89,000 on Namrata, which Namrata accepted and returned. Rajan endorsed this bill to his creditor Arjun on 6/9/2016. The bill was dishonored on the maturity date and Arjun paid noting charges of rupees 440. Past necessary journal entries in the books of all the parties. So here Rajan is the creditor and Namrata is the debtor. Rajan sold the goods to Namrata on credit. And here 3 months is given. After 3 months there is a maturity date is there. Now we write the journal entries. On 6/9/2016, bill is dishonored. Journal of Rajan. 2/9/2016, Namrata's account debit 89,000 to sales account 89,000, being goods sold on credit. Here Namrata is the receiver and goods goes from the business unit, so sales account credit. 4/9/2016, bills receivable account debit to Namrata's account. Bill receivable drawn by the Rajan and bill accepted by the Namrata. So here bills receivable account debit to Namrata's account. Arjun's account debit 89,000 to bill receivable account 89,000. Being bill endorsed to Arjun. Here Rajan endorsed the bill to Arjun. Being bill endorsed to Arjun. 7/12/2016, Namrata's account debit 89,440 to Arjun's account 89,440. Being bill dishonored and noting charges 440 paid by Arjun. Journal of Namrata. 2/9/2016, purchase account debit 89,000 to Rajan's account 89,000, being goods purchased on credit. Rajan's account debit 89,000 to bills payable account 89,000. Here Namrata is the receiver. Here Rajan is the giver and Namrata purchased the goods. So purchase always debit. Goods comes in a business unit and Rajan is the giver. So Rajan's account credit. Rajan's account debit to bills payable. Here Rajan's account debit and bills payable account credit, being bill drawn by Rajan accepted by Namrata. In 6/9/2016, no entry because this transaction is between Rajan and Arjun. 7/12/2016, bills payable account debit 89,000, noting charges account debit 440 to Rajan's account 89,440, being bill dishonored and recorded along with noting charges. Now journal of Arjun. Here third party is also there. Drawer, acceptor and payee. 8/9/2016, bills receivable account debit 89,000 to Rajan's account 89,000. Here Arjun accepted the bill which is given by Rajan, being bill receivable against dues from Rajan. Rajan's account debit 89,440 to cash account 440 to bill receivable account 89,000. Being bill dishonored and paid noting charges. Now question number 8. On 1/8/2016, Dharmesh drew a 1-month bill of rupees 75,000 on Awadh, which Awadh accepted and returned on 28/8/2016. Dharmesh sent this bill for collection through bank. The bill was dishonored on the maturity date. The bank debited the amount including noting charges rupees 375 and bank commission rupees 225 to Dharmesh's account. On 25/9/2016, Awadh paid the entire amount payable to Dharmesh by a check. Pass necessary journal entries in the books of Dharmesh and Awadh. Answer part. First of all, we write the journal entry in journal of Dharmesh. 1/8/2016, bills receivable account debit 75,000 to Awadh's account 75,000, being bill accepted by Awadh. 28/8/2016, bill for collection through bank account debit 75,000 to bills receivable account 75,000, being bill sent for collection to bank. 4/9/2016, Awadh account debit 75,375, bank commission account debit 225 to bill for collection through bank account 75,000 to bank account 600. 375 and 225. This is for commission and this is for discount. So this both the amount to bank account, bank paid. Being bill dishonored and noting charge and bank commission recorded by bank. 25/9/2016, bank account debit 75,375 to Awadh's account 75,375, being received outstanding dues by check. Now journal of Awadh. 1/8/2016. Thermis account debit 75,000 to bills payable account 75,000. Being bill drawn by Thermis accepted. 28/8/2016. There is a transaction between Thermis and bank. So there is a in our journal there is no entry. 4/9/2016. Bills payable account debit 75,000, noting charges account 375 to Thermis account 75,375. Being billed dishonored and recorded along with noting charges. Thermis account debit 75,375 to bank account 75,375. Being paid outstanding debts by check. Now, question number 9. On 16/6/2016, Sanjay sold goods of rupees 78,000 to Harnish. On 26/2016, Sanjay drew a bill of necessary amount and period of bill is 4 months on Harnish, which Harnish accepted and returned. On 15/10/2016, Harnish requested Sanjay to cancel the old bill and drew a new bill for 2 months period along with the interest rupees 1600. Sanjay agreed to the request of Harnish and drew a new bill for the required amount, which Harnish accepted. Harnish paid the money on the maturity date. Write journal entries in the books of Sanjay and Harnish. Answer part. First of all, we write the journal entry in the journal of Sanjay. 16/6/2016. Harnish account debit 78,000 to sales account 78,000. Being goods sold on credit. 26/2016. Bills receivable account debit 78,000 to Harnish account 78,000. Being bill accepted by Harnish. 15/10/2016. Harnish account debit 78,000 to bill receivable account 78,000. Being old bill cancelled. 15/10/2016. New bill receivable account debit 79,600 to Harnish account 78,000 to interest account 1,600. Here interest calculated 1,600 because there is a accommodation of a new bill is there, and this new bill receivable account amount with interest 79,600. 79,600, 78,000 and 1,600. New bill receivable account debit to Harnish account and to interest account. Being new bill accepted by Harnish along with interest. 18/12/2016. After 2 months, there is a amount of a bill received. Bank account debit 79,600 to new bill receivable account 79,600. Being amount of bill received on maturity date. Now, journal of Harnish. 16/6/2016. Purchase account debit 78,000 to Sanjay account 78,000. Here Harnish purchased the goods from Sanjay. Being goods purchased on credit. 26/2016. Sanjay account debit to bills payable. Here Harnish accepted the bills payable from Sanjay. Being bill accepted. 15/10/2016. Bills payable account debit 78,000 to Sanjay account. Being old bill cancelled. When bill cancelled, then opposite entry is there. 15/10/2016. Sanjay account debit 78,000, interest account debit 1,600 to bills payable account 79,600. Here old bill is cancelled and new bill is accepted. So being new bill accepted along with interest. 15/12/2016. After the given time period on the maturity date, payment is there. New bill payable account debit 79,600 to bank account 79,600. Being amount of bill paid on the date of maturity by check. Now, question number 10. On 1/11/2016, Kamalbai sold goods of rupees 2,50,000 to Vishal. On 3/11/2016, Kamalbai drew a 4 months bill of rupees 2,50,000 on Vishal. which Vishal accepted on the same day. On 26/2/2017, Vishal gave a check of rupees 50,000 and requested Kamalbai to cancel the old bill and draw a new bill along with interest of rupees 3,000 for 30 days. Kamalbai agreed to the request of Vishal and drew a bill for required amount including interest, which Vishal accepted before the maturity date on 24/3/2017. Vishal was declared insolvent and 15/4/2017 received the final dividend at 40 paisa from his receiver. Write journal entries in the books of Kamalbai and Vishal. Here Kamalbai is the creditor because Kamalbai sold the goods of rupees 2,50,000 to Vishal. Here Vishal is the debtor. Kamalbai drew a 4 months bill. Vishal accepted this and on 26/2/2017 Vishal gave a check of rupees 50,000. 2,50,000 minus 50,000, 2 lakh remain, and requested to Kamalbai they cancel old bill and draw a new bill along with interest 3,000. Means 2,03,000 is there, and time period is given 30 days. Kamalbai agreed the request of Vishal and draw a bill for the required amount including interest. Vishal accepted before the maturity date on 24/3/2017. Vishal was declared insolvent and on 15 April there is a 40 paisa is there, means 1 rupee is there, then 40 paisa. So from his receiver. So this way we have to write the journal entry in both the books, debtor and creditor. Answer part, journal of Kamalbai. 1/11/2016, Vishal account debit 2,40,000 to sales account 2,40,000, being goods sold on credit. 3/11/2016, after 2 days, draw the bill by Kamalbai. Bills receivable account debit 2,50,000 to Vishal account 2,50,000, being bill accepted by Vishal. Kamalbai is the drawer. Kamalbai drew the bill to Vishal. Vishal accepted this and returned it. 26/2017, 11 after 4 months is there, 12, 1 and 2. So 26/2017, Vishal account debit 2,50,000 to bills receivable account 2,50,000, being old bill cancelled by Vishal. Now bank account debit 50,000, means Vishal paid 50,000 rupees. 2,50,000 minus 50,000, now 2 lakh remain, but Vishal gave that interest 3,000 rupees. So new bill receivable account 2,03,000. Vishal account 2,50,000 to interest account 3,000, being cash received and new bill accepted by Vishal along with interest. Now 24 March 2017, Vishal account debit 2,03,000 to new bill receivable account 2,03,000. But on 15 April, being new bill cancelled due to insolvency of Vishal, Vishal become the insolvent before the maturity date. And so 24 March, Vishal account debit to new bill receivable account cancel this bill. Now 15 April 2017, bank account debit. If 1 rupees is there, then 40 paisa. This calculation 2,03,000 is equal to 81,200 rupees received from Vishal. So bank account debit 81,200. Bad debt account, because now this amount is not received, and so it is a loss for the business unit, and so bad debt account 1,21,800 to Vishal account 2,03,000, being received the final dividend at 40 paisa by check. Journal of Vishal. 1/11/2016, purchase account debit 2,50,000 to Kamalbai account 2,50,000, being good purchased on credit. 3/11/2016, Kamalbai account debit 2,50,000 and to bills payable 2,50,000, being bill accepted. 26 February 2017, bills payable account debit 2,50,000 to Kamalbai's account 2,50,000. This old bill is cancelled. 26 February 2017, Kamalbai account debit 2,54,000, interest account 3,000, to bank account 50,000, to bill receivable account 2,03,000. Here print mistake is there. Here 50,000 is there. New bill payable account 2,03,000 to Kamalbai account 2,03,000. Being bill cancelled on insolvency. Kamalbai's account debit 81,200 to bank account 81,200. Being paid the amount final dividend by check at 40 paisa. So this way we completed up to question number 10. Thank you very much.